All right, let's dive right into this explainer and critically evaluate the long-term sustainability and, frankly, the operational reality of global airlines. Today, we're putting on our financial analyst hats to look past all the PR and really assess the actual business viability of this UK startup carrier. We've got a seriously fascinating case study here of massive ambition running headfirst into the very grounded realities of the aviation industry. So, the absolute most telling data point to kick things off is this number right here. 1. It has been exactly 1 year since Global Airlines completed the inaugural revenue flights of its single Airbus A380. 1 year. And since that initial burst of excitement, there's been virtually zero recent movement. Look, when you're analyzing a pre-revenue or early-stage startup, momentum is literally everything. A 1-year operational pause is a massive red flag that absolutely demands a closer look. Here is the roadmap for our risk analysis today. We'll be looking at Section 1, Stalled Ambitions, the Fleet. 2, Boardroom Turmoil and Shareholders. 3, Management's Track Record. 4, Regulatory and Maintenance Roadblocks. And finally, 5, Financial Risks for Investors. Okay, starting with Section 1, Stalled Ambitions, the Fleet. You know, in aviation, if your planes aren't flying, you're burning capital at an incredible rate. This timeline brilliantly illustrates the stark contrast between their incredibly ambitious launch last year and the total lack of flight activity since. In May 2025, they had these high-profile inaugural flights from Glasgow and Manchester to JFK. But just 2 months later, by July, their single A380 was parked down in southern France. Fast forward to December, and the CEO was releasing videos claiming relentless progress. Yet here we are in May 2026, marking a full 1-year anniversary of complete fleet in action. We really need to wrap our heads around the immense logistical and financial burden of keeping a massive quadjet parked at Tarbes-Lourdes-Pyrenees Airport for nearly 10 months. An Airbus A380 is not exactly a small asset you can just leave parked in a driveway. Long-term storage for a massive widebody requires highly specialized preservation maintenance, huge parking fees, and a really complex logistical effort just to make sure the aircraft doesn't degrade while it sits there doing nothing. This is just a pure cash drain on the business. Now, what's incredibly interesting here is the jarring disconnect between the CEO's public communications and the physical inaction of their single plane. In a December video, CEO James Asquith stated they've worked relentlessly behind the scenes on a whole range of next steps. As analysts, we have to take a highly critical perspective on the transparency here. I mean, when the PR says relentless progress, but the physical multi-million-dollar asset hasn't moved an inch in nearly a year, investor confidence is naturally going to be tested. Moving right along to Section 2, Boardroom Turmoil and Shareholders. So when your primary asset is literally stalled, you usually look to the leadership to navigate the crisis, right? Well, a steady boardroom is vital for any pre-revenue startup, but this spring saw 2 twin departures that briefly left the founder entirely alone at the helm. According to company's house filings, Thomas Stokely resigned as a director on April 14th, followed closely by Prashant Uttamchandani on May 3rd. That left CEO James Asquith as the sole director for a couple of days until a new director, Dylan Salamon, was brought in on May 5th. This kind of high-turnover leadership reshuffle right in the middle of an operational pause, it's highly concerning for future stability. And complicating matters even further, the 2 departed directors remain significant shareholders. So while they're no longer steering the ship on a daily basis, they still hold substantial equity. And as a rather notable data point regarding the diverse backgrounds involved here, Thomas Stokely actually has documented links to the adult website OnlyFans. This really complex shareholder structure mixed with those sudden board departures raises some pretty serious questions about the strategic alignment and the long-term vision of the company's owners. Which brings us to Section 3, Management's Track Record. We need to see how this whole leadership shift builds our risk profile by looking closely at the operational credibility of the team. This contrast perfectly illustrates the massive gap between the monumental task of aviation operations and the background of the new director, Dylan Salamon. Operating a commercial airline, especially one using a massive, highly regulated A380, requires incredibly deep technical, regulatory, and logistical expertise. But on his own LinkedIn profile, Salamon describes himself as technically an entrepreneur with a background in founding luxury yoga retreats and curling clubs. We have to objectively compare this business model with the previous companies led by the new director. Any serious analyst must look at this track record of dissolved and ceased experiential businesses and question how this entrepreneurial background actually translates to future airline stability. While the curling club remains a going concern, his yoga and fitness retreat company ceased trading in 2022, and his well-being company was voluntarily dissolved just last year. Guys, founding experiential pop-ups and wellness retreats is vastly different from navigating international aviation law, maintaining quad-jet engines, and securing an air operator's certificate. For sure, this presents a serious operational credibility risk. Let's move into Section 4, Regulatory and Maintenance Roadblocks. Okay, so what is actually keeping this plane parked in France? Well, the CEO specifically cited this MRO backlog as the core reason for their delays, and it represents a massive roadblock. MRO stands for Maintenance, Repair, and Overhaul. It is a strict, legally mandated requirement. Right now, there is a severe industry-wide bottleneck for these exact services. It's like a giant waiting room. You cannot fly commercial jet without these certified checks, and Global Airlines is stuck waiting at the back of a very long, very expensive line. Ultimately, obtaining an air operator certificate and clearing these maintenance hurdles are existential requirements. They aren't just minor speed bumps. An AOC is basically the golden ticket in this industry. Without it, you aren't an airline. You just own a very expensive grounded plane. When you combine the massive fight for an AOC with the MRO backlog, the compounding costs of long-term A380 storage, and external economic factors, these operational hurdles start looking increasingly insurmountable for a startup. And finally, Section 5, Financial Risks for Investors. So how do all these factors impact the bottom line? An investor has to seriously question how current raised fuel prices will affect the future viability of a massive quad-jet airline that isn't even flying yet. The A380 has 4 engines. It is notoriously thirsty. Even massive established legacy airlines struggle with A380 profit margins when fuel prices spike. For a startup with a stalled operation trying to navigate raised aviation fuel prices before they've even established a steady revenue stream, that is a critical and perhaps fatal financial vulnerability. When we take a step back and objectively evaluate the long-term sustainability here, these are the major operational realities and financial risks that heavily outweigh the optimistic PR. You've got a stalled physical asset racking up massive storage fees, a high-turnover leadership team whose background in yoga retreats doesn't exactly match the intense regulatory demands of aviation, severe technical and AOC hurdles, and the looming threat of escalating fuel costs. I'm going to leave you with this final thought. Based on all the hard data we've reviewed today, you really have to ask yourself, is Global Airlines a viable long-term investment or an ambition permanently grounded by reality? Thank you so much for joining me to break this all down today. If you found this explainer valuable and want to keep making sense of complex aviation and financial topics, please be sure to hit like and subscribe to the Airflight Space channel for more deep dives. Catch you next time.